compliance person. We have to behave ourselves. Oh, hello. Sorry, I didn't realise my mic was on there.
Yeah, there you go. Yeah, all falls apart.
Oh no!
So from that, I'm getting the sense of someone important is coming into the office, and we've all got to behave yourselves.
No, it was actually news that we've hired someone in compliance to start in January. Which is why we have to behave ourselves. Maybe I don't. Maybe I'm now for the chopping block. So
the less they know about this show, the better, I think.
Mate,
100%. This comedy timing is quite good because I was actually going to start the show berating you because for those that don't know, I'm starting to feel like utter shit and I feel like I'm about to die. Tom Wiseman, our dear friend who helps us behind the scenes with these, he's also coming down with it. And this morning on our little WhatsApp group chat, you said, "Oh, it's okay, lads. I'm starting to feel better." But
I am.
Yeah, but you fucking idiot. You're the one that gave it to me, you prick.
But I didn't give it to Tom.
No, well, maybe not. Well, who knows what goes on behind the scenes?
Up north.
Grim. Anyway, well, everyone, welcome. It is Thursday, the 18th of December. It is, if you didn't know already, pretty much the penultimate show of the year. So the wheels have well and truly fallen off, assuming they were ever bolted on in the first place. This is the Morning Ramble, where myself and Mr. Michael Brown will be giving you, as usual, a roundup of what has been going on in markets, what to look out for today, an update in the news, etc., what's been going on. Hopefully add a bit of value to your day, occasional rants, occasional trigger words, lots of swearing. Again, it's very much pub side or bar side rather than fireside. Yeah, usual caveats apply. Nothing we say is trading investment advice. Nothing we say is endorsements unless we make it very fucking clear. But that's it. I'll tell you what, shall I crack straight into giving the final market update from Clive Lambert?
Yeah, I don't know who Clive thinks he is taking tomorrow off without telling us first, but, there we go. Such is life, I suppose.
You know what? He's probably out on the town tonight. He's an old man now, so he can't really work the day after.
Painting the town red.
Exactly. Well, painting the town in candles. Anyway.
Just running around shouting Marabuzu to everybody.
Exactly. Get done for terrorism or something. Anyway, moving on. Right, what am I saying? Right, so the market update on the level to watch today for our good friend Clive Lambert at Futures Techs. This is, as he says, the last wrap of the year, returning on January the 12th. Oh,
January the 12th? Yeah. Fucking hell, Clive.
Yeah, he loves it, brother. I think we need to give Zach a name change because there's a new Judith Chalmers.
There really is, isn't there?
Anyway. Equities mostly offered yesterday. S&P like 68.33 on the way to a low of 67.75. The DAX that broke support at 23,906 into the close yesterday, although we're back above there this morning. Oh, one thing I did see, I think I saw the Nasdaq and the S&P. This isn't from Clive. I saw it myself with my own eyes. I think the S&P and Nasdaq etc. are very close to the 100-day moving average for anyone looking for an opportunity to wade in.
They are indeed, yes.
Not trading or investment advice, obviously. The FTSE, once again, bucked the trend and saw gains roll in Europe tomorrow. So what he means by that is futures contracts roll to March. I'm assuming it's still March. Is it still March?
Yeah, that should be.
It's been a while. Do you know how I used to remember that when I was a runner? Hummus. HMUZ.
Do you know what? That's actually, for you... That's very good.
Remember back when I was a runner, so like 20 odd years ago, I needed all the help I could get. So
you still do.
Bunchi got to resistance at 127.75 to 79 yesterday, then sold off to 127.35, although it's bid so far today. Cable saw a deep dip to 133.11 yesterday, where responsive buyers stepped in. I love the responsive buyers.
Oh, no.
Bitcoin is holding above support levels at 84,000, and of course, one below that we've got 80,500. But if these breaks, we should see further weakness. Gold, the yellow metal, is trading just shy of its all-time high at 43.98. Silver got up to 67.18 yesterday, a new all-time high, of course. Platinum, palladium also continued their strong recent showing, the former getting up to levels last seen in 2008. We're going to start seeing platinum last seen at financial crisis level headlines any second.
Oh, and then it's going to mean all the usual lemmings are running around going, oh, what does platinum know that we...
No, exactly that. Exactly. I'll give you a clue. It doesn't know anything about the financial sector at all.
No, it's literally fuck all. It's the same people who talk about Dr. Copper and all that sort of shit.
Oh, no, I don't mind saying Dr. Copper. It's a bit much.
Of course you don't.
I need all the fun I can get these days. WTI posted some positive price action for the first time in a while, and yesterday's Marabuzu support at 59.75 held to the tick overnight. So Clive guaranteed he's getting frothy knickers over that one. The recent rout in Henry Hub also put some green on the chart. So maybe we'll see a retracement there after the recent downside that we've seen for quite some time. EU carbon markets posted a bearish outside day yesterday, which means the low and the high both outstripped the previous day's low and high, and it posted lower yesterday. So maybe the recent gains in that one have been found some opposite trade finally. TTF, the European benchmark for nat gas, is showing some signs of recovery, but still has a bit to do before Clive's convinced of any traction. And then, according to him, thank you to everyone for their support and readership in 2025. See you in 2026. Go piss off on holiday, Clive.
Yeah. Bye.
Yeah, bye. See ya, you mug.
Some of us are going to be working tomorrow, Clive.
Although he did sign my book, thank you. Although he did swear in my book at me, so in what he said. So.
Deserved, probably.
Absolutely. I dragged him to the pub at 11:30 when he wanted to do some work. Absolutely deserved.
Right, we may as well move on then. In that case, I think it's me. I will keep things relatively short and sweet in terms of yesterday, because there wasn't too much going on, and it is a very, very, very busy day ahead today. So we've got plenty to talk about on that front. In fact, the main sort of news flow over the last 24 hours or so has come from President Trump's address to the nation overnight, which was basically filled with all the usual propaganda nonsense and rhetoric, and very little by way of sort of concrete announcements. The only one concrete announcement that we did get from Trump is that every active duty member of the US military is going to be getting just shy of $1,800 in, well, he's calling it a warrior dividend, but you or I would consider it a bonus.
What's he costing on this? He's saying like every member. So is he talking like the generic backroom staff that don't really do anything, as well as the people like at the front?
Well, I don't know what the definition of active duty is technically. I mean, because it could include anyone. It sounds very, very broad to me.
Because I've seen some pictures of some people in the US military that are basically just sat behind a desk that, I'll be honest, you look fitter than them, and I've seen you walk around. Now, if you're on the front line and getting the same bonus as them, you're going to be like, what the fuck is going on here? The old gravy seals in the back room.
Well, yeah, quite. So anyway, a few people are going to be getting $1,800. The rest of that speech was just all the usual nonsense around how it's the best economy that anyone has ever seen, and it was the worst thing in the world when Biden was there, and blah, blah, blah. Who cares? As for other bits and bobs from the last 24 hours or so, we did hear from Fed Governor Christopher Waller yesterday. He was noting how the jobs market is very soft, with the economy close to zero jobs growth. He was saying also that inflation expectations are pretty well anchored around 2%. And that they should continue to cut rates at what he called a moderate pace, as also stressing his belief that rates are currently between 50 and 100 basis points above their neutral level. That last remark does contrast with what Chair Powell was saying at last week's press conference, where he was saying that rates are now in what he called a plausible range of estimates as to where neutral may lie. Now, of course, he didn't say how wide this range would be, but this is something that is going to become a greater and greater theme as we move into 2026, with easing cycles coming to an end. All these central banks are basically trying to feel around and find where that neutral rate of interest is. And obviously where that is depends and determines how much further they are going to lower interest rates. Sticking with the Fed, Treasury Secretary Scott Bessent was talking about the Fed yesterday. He was saying that any concern over Kevin Hassett's independence is, quote, absurd, and that he, along with others, would make a good Fed chair. I mean, he's not going to say anything else, really, but it is just, I think, interesting that Bessent's getting ahead of this one, because, again, it might suggest that Hassett is the front runner now. Obviously, Kevin Walsh is back in the running, and Christopher Waller had his interview for the job yesterday. Moving on from that, in terms of economic data yesterday, the only thing we had was the latest IFO sentiment surveys out of Germany. They were rather grim, actually. The business climate metric falling to 87.6, down from a prior 88.1. Current assessment and expectations metrics also coming in below expectations. Of course, we did have the UK inflation figures yesterday, but we covered those in the show yesterday morning in any case. On the trade front, China's Commerce Ministry, they have approved some EU rare earth export licenses, and they also confirmed at a press conference this morning that they are continuing to negotiate with the European Union on the issue of electric vehicle tariffs. Moving on from that, here in the UK, the FT reporting that the government are going to water down regulations for financial benchmarks. This is a bit of a technical change, but it basically means that asset management firms or asset managers are going to be able to purchase financial benchmark indices and data and all this sort of thing without the benchmark providers needing to jump through as many hoops as they do at the moment. This is actually not a bad idea. And it's as the Treasury are, well, long overdue, but finally looking to sort of unwind and undo some of the more onerous parts of MiFID and ESMA, which the UK obviously just kind of transplanted into our own statute book when we left the European Union. But obviously we've now got the flexibility to change that, and it's good to see that they are doing so.
Just on that, we do mock the state of like LSEG and the lack of IPOs, etc. But one thing that London does very, very well is this kind of non-IPOing side of the business and the equation, and we're far superior to Europe in that sense. So it is good that things are still like this are happening, and we're getting even better about this because it's almost like bite the bullet time, and we've mentioned this in the past where anyone kind of looking for London to be back in the big boy club or at the adults table regarding IPOs and funding on that front is not going to happen. But what we can do very well is stuff like this. So more power to them. So we do credit where it's due to the London financial scene.
Indeed. It's very rare that we do that. Moving to the tech sector, obviously a bit of a quite a chunky leg lower in equities yesterday. AI jitters continuing. Oracle were the catalyst once again. Apparently their $10 billion data center that they're building in Michigan could be in limbo. Blue Owl, who are one of the biggest private credit companies out there, they have pulled out of funding this data center. Oracle are now sort of hurriedly looking for someone else to help them pay to build this facility. There are reports that Blackstone could be stepping in as a financial partner there. But again, just shows how some degree of enthusiasm, particularly around debt-financed AI spending, is beginning to wane. Although on a slightly more positive note when it comes to the AI theme, we did have earnings from Micron after the close yesterday. They delivered both top and bottom line beats and decent guidance, with the stock rallying by around about 8% after hours. And that may be just settling a few nerves if you look at where futures trade this morning, with the Nasdaq future just ticking to day highs as I speak. And a couple of other headlines just lastly in the tech space. Alphabet, they are going to collaborate with Meta to expand software support for their AI chips. This is according to Reuters, citing sources. Of course, Google are now pushing their TPU chips as an alternative to NVIDIA's GPUs. If anyone actually knows what that stands for, then please do write in on a postcard. And lastly, OpenAI, they are looking to raise even more money. According to the information, they are looking to raise tens of billions at a valuation of around 750 billion with a B US dollars. And that, of course, is as well. I think rumor probably continues to swirl that the firm may look to IPO at some stage, potentially even.
I do, part of me, I do genuinely think that, as we said before, is letters of intent all the way down with this investment, right?
Yes.
And it doesn't take much, something like Blue Owl, to pull out that kind of these letter of intents become even more shaky than what they already are. And the fact that we've got these headlines such as, OpenAI cutting the vesting time for new employees, all of a sudden talks for another valuation. It almost feels like, I don't know, the vibe I'm getting is that they need to keep putting these kind of headlines out there, because the moment they stop paddling, they'll sink.
Yeah, it does feel like that.
You know what I mean? It's like, keep these stories, just keep us in the paper with big numbers around us. That's the vibe I'm getting.
Just keep drip feeding it, because we need to fuel that optimism every day or every week. The market wants another positive catalyst, no matter how sort of woolly the story might be. Well, we just need to get it out there.
Exactly that, my friend. It's almost like, if no one could, everyone's forgotten about the 300 billion that they said 6 months ago that didn't come to anything. If you added all these up, we're probably in the trillions, countless trillions already. But because everyone keeps forgetting about the old deals, just float another idea about, another multi-gazillion dollar deal, and it just keeps people interested. But it does feel to me like they're only doing this for show at the moment. And again, the tide's going out, and we'll see you swimming naked.
Yes, indeed. We'll definitely want to watch into next year. But that was all from me for the time being.
Lovely. Well, cracking on with the overnight news roundup, hot takes from that. As always, if you follow Zach Eisman on Twitter, do subscribe to our Substack, the overnight news roundup, and get this sent directly to your inbox. Starting off, with, I was going to start off with the OpenAI, but you covered that. So Micron smashed expectations so hard that Morgan Stanley called it the biggest surprise in US semiconductor history, excluding NVIDIA. AI developers are scrambling for memory chips and supply is tight. Shares jumped 10%. So there is some good news out there. Trump said the next Fed chair will want to lower rates lower by a lot. Sorry, I'll start again. I need to put my teeth in. I've had 2 lemon sips already today, so I apologise. Trump says the next Fed chair will want rate, quote, lower by a lot. President Trump said he'll soon announce the next Fed chair, and it will be someone who believes in lower interest rates by a lot. Promised mortgage payments will come down even further. Activist investor Elliot has built, not just one guy, obviously, has built a stake over.
and the guy who runs the firm is not actually called Elliot either, for those who are unaware.
There you go. He has built, or they have built, a stake of over $1 billion in Lululemon, and is bringing a potential CEO candidate to help turn around the struggling athletic apparel retailer. Obviously, the CEO left very recently, and they had a good old pop on the back of that. BP CEO Murray Auchincloss, I butchered that name, is stepping down after less than 2 years, at the helm. The oil giant is bringing in an outsider as his replacement, and the lady that is his replacement, she's a fine CEO, and she's also a bit of a specialist in M&A. So we're about to see something going on in the corporate structure of, or the holding structure of BP. Maybe some breakups, maybe something going on there. So,
well, Elliot has got a big stake in BP as well, of course, haven't they?
Yeah, of course they have. Yeah, so one to watch there for which is one of the UK's biggest names. President Trump announced you've covered this. It was actually not 1800, it was 1776. There you go.
Oh, sorry, there we go.
Yeah. DoorDash. Well, there you go. It proves my point. DoorDash teaming up with OpenAI. Of course they are. Partnering with OpenAI to offer grocery shopping app within ChatGPT. You'll soon be able to order your groceries through your AI chatbot. Because this ain't going to go wrong at all. It's going to hear our friend Fatty talking about things he shouldn't have, and he's going to get a big old delivery at the door.
Oh, God.
US blockade.
Some of the things he thinks of, you would not want to get them delivered.
No, exactly. They get the bomb disposal team around for the vibrating packages. But anyway, moving on. The US is enforcing a partial oil blockade on Venezuela. Apparently, yesterday was a total blockade, but there you go. Targeting sanctioned ships that account for 70% of its oil exports. An economist estimates that could cut Venezuela's revenue by $8 billion annually. Federal Reserve issued guidance encouraging banks to engage in, quote, certain innovative activities. It sounds very mysterious. Another step by US regulators to welcome crypto and novel business tie-ups into traditional finance. Honda, they will halt production at plants in Japan and China in the coming weeks. A reminder that the global chip shortage is still causing problems years after it began. Obviously, so it's a chip shortage problem everywhere. For those saying it's just an accounting issue, tell me why they're shutting down plants. China, they've just split off a Belgium-sized island for separate customs processing, as you do, creating a new Hong Kong-style commercial hub as part of its bid to join major Trans-Pacific trade deal. I presume the trans in Trans-Pacific doesn't mean trans as in, No, moving on. I'm only saying this because you got your new compliance person started. The Chinese investment bank jumps 10% on a $16 billion merger. CICC, I think that's the construction bank, right? CIC.
I think so, yeah.
Shares surged as much as 10% after it detailed plans to buy 2 rivals in a $16 billion share swap deal, potentially creating China's 4th biggest investment bank. South Korea officials are warning against speculative currency moves as the won hovers at a 16-year low against the dollar. The finance ministry is loosening forward caps to supply more dollars. The penultimate story for me today, China shipped 13% more rare earth products in November, a sign of a more relaxed export regime is restoring flows of the critical minerals used in EVs, weapons and high-tech manufacturing. And finally for me, S&P upgraded Argentina's long-term foreign currency rating to CCC plus from CCC, citing improved access to liquidity and declining economic vulnerabilities and the Milei's reform. So he'll be happy.
Really, I was fully expecting some sort of peso-related pun there, but you've
I'll be honest, mate. I'm really my brain is going at about 30% this morning. I've had 4 or 5 lemon sips, I think. I'm now drinking them cold. I'm mixing them in with water just to get around them. I'm going out for the KBL reunion, Kite Broken Limited reunion later. I need to be on top form.
Yes, I'm sure they'll all be very pleased to see a plague-infested dwarf rock up in the pub. But
it's really worse.
Well, yeah, there is that. Moving very swiftly on, in terms of the day ahead, as I said, quite a lot going on over the next 24 hours or so. We've already had a policy decision from the Riksbank over in Sweden. They kept their policy rate steady at 1.75% as expected, but also repeating their prior guidance that rates are likely to remain at the current level for some time to come. Into the remainder of the day, in about 10 minutes' time at the top of the hour, The Norges Bank, they are set to also stand pat, holding the policy rate steady at 4%, while continuing to pencil in rate reductions from the middle of next year. Moving on from that, at lunchtime, midday here in the City of London, the Bank of England are set to deliver a 25 basis point cut, lowering bank rates to 3.75% in what would be the MPC's first rate cut since the summer, coming on the back, of course, of this week's much cooler than expected CPI print, and also as the labour market continues to weaken at a worryingly rapid pace. The consensus estimate is for the MPC to vote 5-4 in favour of such a rate reduction, with Governor Andrew Bailey swinging to join the Doves and voting through that rate cut, having voted to keep policy steady last time out. Although it must be said that after the CPI print, there is a chance that that vote is now much less close than we had previously been expecting. In any case, the MPC likely to reiterate in the policy statement the bank rate remains on a gradual downwards path, with further rate cuts to depend on the evolution of the inflation outlook. Do note that we don't get a press conference from the BOE this time out, nor do we get any new economic forecasts. And in terms of money markets, they are fully discounting a 25 basis point cut today, while pricing around a 1 in 5 chance of another rate cut at the February meeting. Then after the BOE at 1:15 this afternoon London time, we get the ECB's final policy decision of the year. And we better get used to this because the BOE and the ECB share decision days all the way through until June of next year now.
I actually like this idea.
Well, it gets it all out of the way, doesn't it?
Yeah, exactly. It means you don't have to worry about, it just means you can kind of sort your pub kind of calendar out.
Well, absolutely. That was exactly where my mind was going too. In any case, the ECB expected to stand pat on all policy settings, maintaining the deposit rate at 2%, while repeating what is now very, very familiar policy guidance, noting that they are continuing to take a data-dependent and meeting-by-meeting approach, while reiterating that they are making no pre-commitment to a particular policy path. We do get an update to the ECB's economic projections at this meeting, and those projections are likely to point to a marginally faster GDP growth profile over the next couple of years, while also continuing to pencil in inflation undershooting the 2% target in 2026 and in 2027, although the projections will also include the staff's first view as to how the economy will evolve in 2028. So there may be some focus on where inflation is expected to be in that year, although frankly, if anyone believes the ECB can forecast inflation 3 years out, I have a couple of bridges to sell you. At the post-meeting press conference, President Lagarde will likely be asked about Isabel Schnabel's recent remarks in terms of the next move being a hike, but Lagarde will obviously not pre-commit to anything on that front, and she is likely to simply repeat that policy remains in a good place, which is the language she has been using for some time now, to indicate that the ECB's easing cycle is done and dusted. And then rounding off that central bank bonanza overnight, approximately 3:00 tomorrow morning London time, the Bank of Japan are expected to deliver a 25 basis point hike. That would see the policy rate climb to a 30-year high of 0.75%, which gives you an idea of how long they've been running ultra easy policy in Japan. They are also likely to flag that further hikes will continue to follow if their economic outlook is realized. If that wasn't busy enough, we've also got quite a lot of US data today. At 1:30 this afternoon, we get the latest CPI report. This CPI data will be for November. The BLS will not be producing an October CPI print. Of course, as a result of the government shutdown, they were unable to collect the majority of the data that they would need to. In any case, headline CPI, that's seen rising by 3.1% on a year-on-year basis in November. That would be up from the 3% that we saw in September, while core inflation is seen holding steady at 3%, which would be unchanged from where we were in September. I'm just going to throw it out there. I don't think CPI matters at all to the Fed, to be completely honest with you. They are focused on propping up a stalling US labour market and are looking through price pressures at this moment in time.
I make you right, actually. I think inflation is kind of, I don't know why people are so overly focused on that when they've actually been pretty vocal in saying that, there's other things that are taking precedent. Other things that are taking
precedence.
Yeah, I was right.
You were right. You were right. Don't doubt yourself. Well, before you do, let me finish this, because also at 1:30 we get the weekly jobless claims figures. The initial claims number expected at 225, down from 236,000 previously. And do note that that does coincide with the December non-farm payroll survey week. And last, but by no means least, as if all of that wasn't enough excitement for one day, after the market close, we are due to get earnings from both Nike and FedEx, both of whom are pretty useful bellwether stocks for the economy at large. And that is your lot from me this morning.
Do you think Nike will do it? And do you think the FedEx will deliver?
Oh, too predictable, but you're sick, so I'll let you off.
Thank you, man. This is why I love you so much. Thank you.
All right. So we don't have to do that in public, do we?
I felt the virtual pat on the head when I said that. Right, everyone, Michael, especially, thank you so much. Everyone, thank you as well. Whatever you're doing today, keep it tight, stay safe, try and stay healthy. And hopefully you can tune in tomorrow for our last show of the year.